Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 right at about 6774. That's up about 15.5% year to date. Market having a good day today after a little bit of a rough week last week, early this week. Still up about 15.5% for the year, which is once again a very good year. And we'll have a little bit of commentary towards what that means towards the back of this particular market update. But we wanted to touch on two sort of key macroeconomic pieces that came out this week. First being the jobs report, which was kind of a downer. We've got unemployment that ticked all the way up to sort of 4.6%. Still incredibly weak hiring numbers, which is really a theme that we've seen for a long time. And just a lot of indications that the job market just doesn't really feel all that great. And granted, the Fed has cut interest rates twice and continues to be on this sort of teeter-totter between unemployment and inflation. With the Fed maintaining what was a relatively hawkish position coming out of the last commentary, it's a little tough to see those job market numbers continue to move in the wrong direction. And so that's a little bit of a concerning cloud on the horizon. On the bright side of the horizon, we got a CPI report out today that showed inflation that's colder. So it's 0.2% up month over month in the core, or really more like September to November. We didn't really get a report in October, which is something we're going to talk about. But the inflation rate, a lot lower than most economists would expect. Now, that data is cloudy, right? Because while we have an inflation report for November, the government shutdown during much of October and a good portion of November really impacted those numbers. We didn't really collect any data in October. In November, the inflation data that we collected wasn't really in the first part of the month. It was towards the back half of the month. That's really causing some economists to question, is what you're really seeing some discounting due to Black Friday deals? It's just an incomplete data set. And I would also just note, it's only one data point. So we've seen inflation tracking along at this sort of 0.3, 0.2% month over month number. This number is a lot below that. It's more like 0.1%. And if it's true, that's fantastic. But I think that most economists would tell you, you probably need to wait till January to get that CPI report to really know, was that just a blip or was it something that we should be cheering and celebrating? And on that note, I would also just question, is really low inflation a good thing? It is a good thing in the sense that it enables the Fed to have more clarity about what they should be doing, i.e. cutting interest rates, because now all of a sudden you've got a problem in unemployment and, no problem on the inflationary side. So that gives you the ability to say like, okay, well, that I know what Jerome Powell should do. He should cut. That said, if the reason why we're having really weak inflation is because the economy is just not doing all that well, that's fundamentally not the greatest of things. If anything, I'd rather see a Fed that's fighting inflation because the economy is rocket hot than a Fed that feels the need to sort of rush in and stimulate because the economy is a little cold. So it's a tough report. Market getting a little bit of a rally here today, but I just caution people to, look a little bit past the initial data and think a little bit about what that means for the overall health of the economy. Come back to that in a little bit. First, we're going to talk a little bit about market predictions. I'm going to get on my soapbox for a few seconds. It is market prediction time. Goldman Sachs coming out last week with, their forecast for the equity markets. We've seen a number of other banks come out with their forecasts. Everybody's calling for the market to be up, surprise, surprise, about 10% next year, which I think is somewhat silly. We have no idea where the market's going to be. We can't predict where it's going to be 3 months from now, much less 12 months from now. And the data on this is pretty conclusive that these predictions are worth less than the paper they're printed on in terms of their actual forecasting accuracy. So I would encourage you, if you're getting one of those, please either laugh at it, chuck it in the trash, use it as a fire starter, or whatever it might be. Don't put a lot of stock in it because the historical accuracy of those predictions is quite low. Last but not least, I would just note that it is, we're coming off a year where the market has been up about 15.5%, as we noted. Very strong equity market performance. Actually, strong bond market performance as well. Bonds up about 6-ish% year to date. And this is the time when your brain is going to try and convince you to say like, wow, I should be even more risky. Look at how wonderful these equities have been. And I just want to encourage all of you to just take a step back, enjoy the year, but also know that now is actually not the time to be adding risk to a portfolio. You know, we generally like things that have been kind to us, and we generally don't like things that are mean to us, which is the reason why we frequently feel the need to buy when the market's been up a lot and then sell when the market's been down a lot. And that's exactly the opposite of what you want to do from a rebalancing portfolio management standpoint. So just enjoy the returns, look at your account balances, and say to yourselves, wow, that was a great year for financial markets, and we'll see what 2026 holds, because as we touched on with the market prediction performance, nobody really knows, which means adding risk or subtracting risk really not a great idea unless there's something about your life circumstances that have changed. With that, I'd like to wish everybody a wonderful holiday season. As always, if you have any questions, please feel free to reach out to myself or to your advisor. Hope you're having a fantastic day, and I look forward to talking to you again soon.